If billionaires are buying gold quietly while the rest of the world is distracted, that's not optimism. That's a warning. Because when the richest people on the planet start moving their money out of paper assets and into something ancient, heavy, and unproductive, it usually means they see something coming that most people don't. Right now, gold is being hoarded, not hyped. And history shows that this pattern appears right before major economic stress. Most people think gold is boring. No dividends, no yield, no excitement. But billionaires don't buy gold for excitement. They buy it when they no longer trust the system that made them rich in the first place. And what's happening right now behind closed doors looks nothing like confidence. It looks like preparation. Let me be very clear. This isn't a gold promotion video. This isn't fear bait or clickbait. This is about signals. Quiet signals. The kind that Don T trend on social media but quietly shape the future of the global economy. Hedge funds, family offices, central banks, and ultra-wealthy individuals are all increasing exposure to gold at the same time. That doesn't happen by accident. Before we go any further, make sure you like this video and subscribe to The Silent Collapse. This channel exists to decode the financial signals most media avoids or explains too late. Subscribing now means you're thinking ahead, not reacting after the damage is already done. Now here's what most people don't understand. Gold doesn't move because people get excited. Gold moves because trust disappears. Trust in currencies, trust in governments, trust in markets that are supposed to be stable but quietly aren't. When trust is strong, gold sleeps. When trust erodes, gold wakes up. Right now, trust is cracking in multiple places at once. Government debt is exploding. Interest payments are becoming unmanageable. Central banks are trapped between inflation and recession. And financial markets are priced for a level of stability that no longer exists. Billionaires see this clearly because they sit closest to the data, the deals, and the real balance sheets. Insiders are watching something dangerous unfold. The global economy has been propped up by cheap money for so long that it no longer functions without it. Every time rates rise, something breaks. A bank, a bond market, a currency. So policymakers step back, inject liquidity, and pretend the problem is solved. It's not. It's just delayed. Gold benefits from delay. Because delay weakens paper promises. Here's where manipulation enters the story. For years, gold prices have been controlled through futures markets and paper contracts. The amount of paper gold traded daily far exceeds the amount of physical gold that actually exists. This creates an illusion of supply. It keeps prices calm. It keeps panic contained. But it also builds pressure. Billionaires understand this structure better than anyone. That's why they aren't just buying gold exposure. They're demanding physical gold, bars, vaults, delivery, storage outside the traditional financial system. That behavior alone tells you something is wrong. At the same time, central banks are doing something unprecedented. They're buying gold at the fastest pace in decades. Not talking about it. Not advertising it. Just accumulating. Countries that once trusted the dollar system are quietly diversifying away from it. That's not an accident. That's insurance. Ask yourself this. If the system was healthy, why would the people who benefit most from it be preparing for something else? Gold doesn't care about politics. Doesn't care about narratives. It reacts to math. And the math right now is ugly. Debt levels require either massive inflation or a financial repression to survive. Neither option preserves purchasing power. Gold exists outside that choice. This is why calling gold bullish misses the point. Rising gold isn't a celebration, it's a signal. Historically, major gold accumulation phases have aligned with currency stress, sovereign debt issues, and shifts in global power. Gold doesn't cause these changes, it reflects them. Another uncomfortable truth is that retail investors are always late to this trade. Not because they're dumb, but because the signal isn't loud at first. The early phase is quiet accumulation. No headlines, no hype. Just movement in vaults and balance sheets. That's exactly where we are now, and there's a reason this is happening quietly. If the public fully understood why gold demand is rising, confidence would crack faster than policymakers can manage. So the story is softened. Inflation is called transitory. Debt is called manageable. Markets are called resilient. Meanwhile, gold keeps moving into stronger hands. At The Silent Collapse, we don't focus on surface-level explanations. We look at incentives. Billionaires don't hedge emotionally, they hedge strategically. And right now, their actions suggest they're preparing for currency volatility, market instability, and a long period of uncertainty. This doesn't mean an overnight collapse. In fact, the most dangerous scenario is a slow one. A gradual loss of purchasing power, a grinding erosion of trust, markets that look fine on the surface but feel wrong underneath. Gold thrives in that environment. If you're still watching, you probably already feel it. Prices don't make sense anymore. Debt feels heavier. Promises feel weaker. Gold sits quietly in the background, reflecting all of it. As we move forward, don't listen to what institutions say. Watch what they do. Watch central bank balance sheets. Watch physical gold flows. Watch how often rules get changed to prevent panic. These are the real signals. When gold finally moves loudly, it won't be because people suddenly discovered it. It will be because the system finally admitted what insiders already knew. If this video made you think, share it with someone who still believes everything is stable. And leave a comment below. Do you see gold as protection or as proof that something deeper is breaking? I read the comments, and your perspective matters. This is the silent collapse. Stay aware. Stay ahead.